today. Bitcoin holds steady above $19,000. A top former Google exec wants to make searching the blockchain easier. And Bitfury CEO Brian Brooks shares when he thinks we'll finally see crypto regulation in the U.S. Welcome to CNBC's Crypto World. I'm Pippa Stevens. Digital currencies rising today following multiple days in the red. By noon Eastern, Bitcoin traded just above the $19,000 mark. Ether was in the green, but still trading below the $1,300 threshold. And Polygon rose to about 80 cents. Okay, let's talk about the top stories. First up, a former top Google executive has a new startup that aims to make searching the blockchain easier, and it has backing from top VCs. Sridhar Ramaswamy tells CNBC he started the new Web3 company called NXYZ, which launched today, after securing $40 million in funding back in May from several big investors. NXYZ scours blockchains and their associated applications for data on things like crypto wallets and NFTs, and then streams the info to developers in real time. The round was led by crypto-focused venture fund Paradigm. Coinbase and Sequoia are among those that also invested. Next, a new report reveals that, quote, risky and illicit crypto activity has surged in Eastern Europe in recent months, especially in the immediate aftermath of Russia's invasion of Ukraine. The report by blockchain analytics firm Chainalysis shows that 18.2% of all crypto transactions in Eastern Europe over the past year are tied to risky or illegal activity. That's more than any other region. The report noted that more than 6% of that transaction activity in the area stems from interaction with high-risk crypto exchanges, which usually don't require customers to submit Know Your Customer information. Compare that to the next riskiest region in the report, which had about 1% of transaction activity considered high risk. The increase comes as the U.S. and several other countries have been imposing sanctions on Russia, and as Russia as well as Ukraine have suffered serious economic blows due to the war. Last, Grayscale just filed a lawsuit against the SEC for its decision to reject the company's spot Bitcoin ETF. Grayscale CEO Michael Sonnenschein broke down the company's lawsuit in an exclusive interview with CNBC's Squawk Box this morning, where he said that the company filed its opening brief last night. Now, you might remember back in June, the SEC rejected Grayscale's proposed Bitcoin spot ETF, saying the company hadn't answered its questions on how to prevent market manipulation. Crypto bulls have pinned their hopes on a spot ETF, leading to more institutional adoption of crypto. But so far, the SEC has rejected every spot Bitcoin ETF put before it. In fact, just yesterday, the SEC turned down WisdomTree's spot Bitcoin ETF, citing a lack of investor protection. Sonnenschein argued this morning that there is a, quote, fundamental flaw in the agency's thinking. Take a listen.
Over a little bit over a decade into the life cycle of crypto, we have to give this industry the time to continue to flourish. New use cases will develop, and along with it, the way that investors and users alike utilize this asset class will evolve.
We reached out to the SEC today, but a spokesperson declined to comment. All right, on to our main story. DC FinTech Week continues today, and that is where CNBC's Kate Rooney spoke with Bitfury CEO Brian Brooks about regulation and the future of finance.
All right, Brian Brooks, great to see you. Thanks
Good to
so
see you,
much for
Kate.
being here.
Thanks.
We're here in DC. You spent some time here
Indeed.
in the prior administration. I wonder if you could handicap for us the potential for any sort of regulation, legislation to happen in the next, I'd say, 6 to 12 months. What are your expectations of any momentum out of DC?
Kate, what I would say is it depends a lot on the midterm outcomes. So if you assume that the Republicans take one or both chambers, then I actually think the chance of bipartisan legislation is pretty high. And that is because I think crypto adoption's fairly high. Democrats realize that, and Republicans are really leaning in. On the other hand, if the Democrats hold both houses of Congress, the leadership of the Democrats has been quite hostile to crypto assets from the administration and in both houses of Congress. So I think it requires at least one house to change hands for there to be momentum.
Interesting. And on the Democrat side, it feels like there has been a little bit of a shift in the tone, at least from last year. There's been a lot of talk about consumer protection, but it does seem like they've embraced the industry a little bit more. Could that be the result of lobbying dollars and some of the time that the companies have spent here in D.C.?
Yeah, I have to say I think that's happy talk. I know the industry says that, but I don't think it's true. You know, there's talk from sort of Democratic backbenchers and next-gen leaders, but the leadership of the party, both in the White House and at the regulatory agencies, let alone on the Senate Banking Committee, is uniformly negative. So I just don't see that happening. It's terrific that there's a group of young Turk Dems who are on our side, but that's not where the leaders are on that side.
And what is their main gripe? Is it still consumer protection, or is that?
I don't think it was ever consumer protection, Kate. What I really think it's about is it's about who controls the financial system. And the crypto movement is all about a user-controlled financial system, and that just isn't what the older generation of Democratic leaders believe in. They believe in a more government-focused system that can be more easily surveilled, more easily controlled, that can direct people, toward the things that, the leadership believes is good for them. Whereas the younger generation is much more about using technology to unlock value for all Americans, but that's just not what the leaders from the 60s seem to believe.
Is there a clear priority in Washington when it comes to what really needs to be focused on, whether it's talking about how to define a security versus a token or a commodity, or is it stable coins? You get a sense that there is a theme out there that is getting the most momentum at this point.
I think the one thing that seems to have a lot of momentum around it has to do with making sure that stable coins don't create the risk of future bank runs. It seems like Democrats and Republicans both agree on that, and that's why I say if the Republicans take the House, I think the McHenry-Waters stablecoin bill has a lot of chance of moving forward because there's that shared belief system. On things like securities law and comprehensive crypto regulation, who owns it, SEC or CFTC, that's so political, I just don't see that happening.
Is there a bit of a turf war going on right now between the agencies?
No, I mean, for a change. I mean, that's always been the case. I think when I was in office, there was a rare moment where you had the Fed, the FDIC, and the OCC all on the same team, really trying to work together. But you don't usually see that even inside of one administration. And getting the nod to be the crypto regulator is a big deal. So even two Democratic agency heads aren't going to want to give that up easily. So for sure, there's a lot of that.
We've talked a lot this year about what's happened with Three Arrows, Voyager, Celsius. Any takeaway for DC and lessons learned that will affect regulation going forward? And is there a sense that there were mistakes made on the side of regulators and not preventing some of those massive losses?
Yeah, I mean, I think the answer is absolutely yes. And, I guess my first thought is, wouldn't it be better if these activities were happening inside of the regulatory perimeter? So, wouldn't it have been better if Three Arrows was regulated as an investment company? Wouldn't it have been better if Terra Luna was subject to banking regulations, right? But for whatever reason, this administration has kept those things outside, which means there's absolutely no visibility into what's going on. A bank would never have had the Terra Luna problem. It would have been seen way earlier. We didn't have that, so that's a problem. And I think the lesson of all of this is better for this to happen with supervision than without. That would be my main message.
So within the existing finance or new regulatory structure, but within the banking system versus how it works right now?
Absolutely. I mean, it's not always banks. Some of these should have been broker-dealers, subject to SEC oversight. Some of them should have been banks, like Terra Luna was engaging in money transmission and payments. They were paying interest. That should have been there. But there is a platform for all of this to happen. Keeping crypto out of the system is not a strategy.
I want to get your thoughts on the markets as well. I mean, the Fed has been a huge topic of conversation and what's driving crypto prices in the industry altogether. Anything else you're watching other than the Fed that could have an impact on prices and just the investing landscape for the next year or so?
Well, I mean, the macro environment is not just monetary policy, right? So the Fed is a key driver, but let's look at the war in Ukraine and what it means for all risk assets. So, in the same way that the Fed's hawkishness on inflation is bad for Bitcoin price. And I've been saying this for years. Some of your colleagues have made fun of me for saying, how can you say that? Turns out I'm totally right. But on the side of other macro stuff, let's say that something really bad happens in Ukraine. Like, let's say that the Russians detonate a nuclear weapon as part of their strategy. That'll be great for Bitcoin, unfortunately, because Bitcoin is a last resort when the system fails. So the question is what other things in the system can fail, not just high inflation, but national security or any other macro shock to the system. All of those things, give rise to high Bitcoin prices.
What about the potential for Bitcoin to decouple from traditional equities? It's been extremely tied to at least the NASDAQ. Do you have a sense of timeline or when at least Bitcoin will start to act as this independent safe haven for?
Look, I totally do. I mean, the times when that's happened have been times of crisis. So if you think about when Bitcoin went from 5,000 to 69,000, it was during the COVID lockdowns, right? When the stock market was going up and down, up slowly, but Bitcoin went up like a rocket ship. It was all because we were in a macro crisis environment and people saw it as a mega safe asset, right? It was a hedge against the end of the world. And that's what it's historically been. When things go back into normalcy, out of a crisis mode, it's a risk asset. And the reason it's a risk asset is because it's thinly traded still today. So the two things that have to happen for Bitcoin to do well are more uncertainty in the world, weirdly, but also broader adoption. And when more people own it, it won't be like any other risk asset. It will trade for its fundamentals.
And if there's more clarity, hypothetically, more adoption?
Absolutely, absolutely. And that means institutional adoption, by the way, because retail can only drive you so far. Until the BlackRocks of the world are really all in on this, it'll only ever get so big.
What are you hearing from the institutional side? Is there a hesitation now that there's not regulatory clarity, as some have described it at this conference? And could that help bring more Wall Street players into the crypto ecosystem?
Well, I mean, look, on the one hand, there's some surprising positive news, right? Just this morning, BNY Mellon announced that they're going to provide custody support for customer crypto assets. That's a big deal. State Street has doubled down on this business over the last couple of weeks. BlackRock announced a Coinbase partnership. Google Pay said this morning that they're going to use Coinbase to clear Bitcoin payments inside of that environment. These are all amazing stories for institutional adoption, but there's still a lot of things missing. I mean, one is we don't have enough bank charters to provide custody support for the asset class. Our KYC and transaction monitoring tools aren't good enough, to really support bulletproof, sort of regulated activity for asset managers. There's still a lot of things missing. So what I would say, just coming back to your earlier question, is in a world where all of the charlatans have now been flushed out, the three arrows of the world have all failed, what's left is the actual fundamental building, right? It's just like the 2000, .com bubble. The stupid ideas get flushed out, the tourists are gone, and what's left is to build an actual decentralized financial system for the world. That's who's left.
Got it, Brian. We'll leave it there. That's a great note to end on. We'll check in after the midterms. Always good to see you.
Fantastic. Thanks, Kate.
Thanks, Brian. All right.
Okay, that's all for Crypto World today, but we are back again tomorrow, and we will see you then.